Good morning, everybody. Happy Monday. It's March 7th. I'm Yohay Elam of Forex Crunch and Market Movers podcast, doing this show as usual for FX Street. Today we'll run down the non-farm payrolls on Friday. This is the main recent developments, but we had a few others. Talk about charts and levels the next 24 hours, and of course, your questions. If you cannot see the chat box alongside the video, here is the address, tlk.io/fxstreet-live-video. I already see a few of you in the room, in the chat room. Okay, so let's begin. Before we dive into the non-farm payrolls report on Friday and its implications on the US dollar, the negative ones, I'll also mention that oil prices continue rising. We had lower rigs and lower production in the United States, and oil prices are certainly on a roll. China has its conference, and it set a target of 6.5 to 7% growth rate from now until 2020. It's the 5-year program. That means that they're going to accept 6.5% growth. And the US primaries continue. Donald Trump is slightly has had a few. Well, his achievements were not so good on Saturday in comparison to Super Tuesday. That's a political story in the background. Now let's talk about the non-farm payrolls. That was the big event on Friday. Of course, we did a long preview, and once again we had a mixed picture. This time we had the switcheroo. This time we had good job gains, but wages were problematic. So 242,000 jobs were gained, much better than expected. 190 was the figure that was in the cards. In addition, previous figures were revised to the upside. A total of 30,000 jobs were added in previous months, in January and in December. The unemployment rate remained steady at 4.9, but the participation rate went up to 62.9. That means that we have the same level of unemployment, but with more people participating in the workforce. Also, another figure, the real unemployment rate, fell from 9.9 to 9.7. All this is, of course, good news, but wages dropped actually month over month from January to February by 0.1%. Really bad news, a rise of 0.2 as expected. And year over year, we had a rise of only 2.2 after 2.5, back to the old range, back to frustration, and not what we wanted to see. So in general, we have more jobs, which is good, and no inflation. That's also good for stock markets because the Fed is not going to hike anytime soon, while we have more people, while the economy continues improving. So it's good news for stocks. Good news for stocks, but bad news for the US dollar. Let's take a look here at what we had in US dollar. This is euro dollar. We had it, this is the move around the non-farm payrolls. This candle here, we had it first drop because of the headline. The headline came out better than expected before markets began digesting the wages. But then we had euro dollar rise all the way to 110.41, 110.42 on Friday, under 110.70, which I still see as resistance. But at least for the time being, despite the fresh falls this morning, it's holding above 109.60. Okay, so we had the dollar weekend on Friday. Now it's beginning to recover just a bit, but nothing too impressive. All in all, with no wage growth, we're seeing the dollar fail to rise. We've also seen that last month in the non-farm payrolls report. Remember, then it showed less jobs gained than expected, only 151,000, but wages came out better than expected, and this was positive for the US dollar. So we're seeing wages becoming more and more important. It's important to remember that for the next moves. Okay. Anyway, euro dollar has supported 109.60, not that strong, but still worth mentioning. On the top side, it's 110.70, and further on the downside, let's leave it at 108.90 or 109, perhaps would be more correct. It's a round number, and yeah, that's where we are at the moment. Good morning, Fabian. Good morning, Forex. FW Forex. Anyway, let's talk about other currencies. The pound continued its recovery. And we mentioned we had a spike above this line of 142.30, but we're back under this line, currently in the range 141.25 to 142.30. I see I think we talked about this on Friday. No reason for the gains in the pound. The Brexit talk, the polls regarding the June 23rd referendum continue showing weakness. Continue showing, an uncertain picture. Many people undecided. We heard both prominent figures, Boris Johnson and I think his name is Gove, the Minister of Justice, talk about, make their case against staying in the EU over the weekend. Also, figures last week from Britain were not good, the PMIs. So anyway, now we're seeing the US dollar recovering. We're seeing the pound falling quite nicely, about 50 pips from now, from the highs seen earlier today. So it's 141, just under 70. 141.25 works as support, followed by 140.50. All right, dollar yen. Here it's a more mixed picture because the yen is a safe haven currency and it weakens when stock markets rise. So it's basically been a choppy move. 113.65. The lines, it's becoming a less predictable currency pair. The lines, well, 114 is still a round number, but it's not that strong of a support. And well, maybe 113.20, 113.10 works here as support. The Japanese yen is still looking for a new direction. Dollar CAD, here we see, well, a much clearer trend, a much nicer picture. Currently 133.40. We reached 133, almost 133, the round number on Friday. 133.70 now works as resistance, followed by the old and strong line of 134.60. What else do we have to the downside? Well, I would say 133. Anyway, the Canadian dollar continued gaining thanks to, well, weakness of the US dollar and also rising oil prices. Let's jump to WTI crude oil. Look at this nice rise. We finally made a real break above $35. Got closer even to 37, currently at 36.36. If we zoom outward, these are the highest levels for the year. Okay, we've last been at these levels, well, yeah, early in the year, maybe first days of the year we were here. So, we're certainly seeing a recovery in oil prices. What's going on in oil? Because I'm talking about oil because not only because of the Canadian dollar, but because it has more implications on other currencies. So finally, we began seeing things are beginning to move in terms of supply. Okay, we talked about too much oil sloshing around markets, just inventories building up, too much oil on ships, nobody cutting production. And this pushes the price of black gold lower. Finally, we're beginning to see some kind of shift. Okay, so we had in the United States, it comes from there. The shale industry showed less rigs. I mean, it's an ongoing decline for many months, but this time it's been more significant. This report on Friday, the Baker Hughes report. Of course, the first rigs that fell were the less productive ones. But now it's already, I mean, beforehand it was maybe the fat, now it's the crude meat of this production. And we're also seeing, in general, production falling. Okay, so rigs and production are going down. This is good news for black gold. This is good news for the Canadian dollar. It has an indirect impact on other commodity prices, such as copper, iron, things that Australia exports, and has sort of an indirect positive impact on commodity currencies together with the rise in stocks. So it's all good news. This is a significant breakout. We had it, WTI gets stuck in range. Now it's, well, this morning it's falling a bit, but in general, we're seeing it rise. Also, Brent oil is up, getting closer to $40 a barrel. Okay, so this is significant. We talked on Friday about the Australian dollar poised to take advantage of a weak NFP. Indeed, we've seen that. We've seen Aussie dollar reach resistance at 74.40. Last week we had lots of good news from Australia. First and foremost, GDP report came out better than expected, 3% growth in 2015. Good retail sales, trade balance, things like that. So we certainly We've seen the Aussie dollar take advantage, reach 74.40, currently struggling with the round number of 74. I see resistance here at support at 73.75, followed by 72.80 to the top side. If we break above 74.40, 75 is the next level to watch. Okay. Also, the Kiwi dollar is sort of getting carried along, enjoying the strong mill prices last week. We reached 68.20. Now we're back down to 67.16. Less reasons for the Kiwi to rise. We have rate decision later this week. So it suffers a bit more when the US dollar now is strengthening. Some support at 67.40, further support at 67. Okay. Dollar Swiss currently rising with this recovery of the US dollar, but on Friday it certainly fell. Parity works as resistance, followed by 140, I would say. And support. I have too many lines here on the chart. This one looks a bit more significant. 98.90 or something like that. Euro Swiss got a boost up, the strength of the euro, and perhaps some intervention by the Swiss National Bank. They had some comments saying that they have not reached the limits of their monetary policy. That means they can always do more, intervene more, cut negative rates to deeper ground over there in Switzerland. Anyway, 109.35 is the current level around resistance. The round number of 110 is further resistance. Let's continue. Euro pound chopping around the old resistance line of 77.40, looks weaker than ever. Further support 78.50. Don't have a clear direction for the pair at the moment. We're certainly off the highs seen there at the 79.30. Okay, weakness in the pound has sort of halted, and the euro is looking for a new direction from Mario Draghi later this week. Okay, now before you continue, I see here a question. Good morning, Jax. Isn't the Kiwi still the best carry trade because of interest rate? Yeah, I still think it's a good carry trade because of the higher interest rate, 2.5%. But remember, we have the RBNZ, Reserve Bank of New Zealand, making its decision later this week on Wednesday. So anything can happen there. And there's also another reason to like the Kiwi, because they export milk, soft commodities, less vulnerable to slowdown in investment, slowdown in less of a commodity bust over there. But as always, it's not a one-way street. Yeah, so things go always. Let's continue. Euro yen, 124.63 is the current level. We went above 125, which I mentioned last week, but never went too far. Perhaps this line is now relevant. 125.25. Further support 124.20 and 123. Okay, both are safe haven currencies, but the yen is much more of a safe haven than the euro. That's why we're seeing it fall. A question here: will risk appetite situation continue this week? Now we're seeing some kind of unwinding of this risk on the risk appetite this morning. A lot depends on what we have later this week, mostly from Draghi. In general, the mood does remain positive. China is there to support growth. The ECB, we know it'll do whatever it takes at the moment. We'll hear today also from the Fed. We'll talk about today's events. I still see a general risk appetite atmosphere continue thanks to oil prices, but we could always have various developments, and it's never sort of risk appetite all week. In general, despite this slide this morning, I see this slide in risk appetite as a small correction in the range. I mean, in the general positive atmosphere, not a change to the dark side. Okay. Pound yen reflects risk appetite. We went above 160. Didn't get close to 163.80, but still on high ground. 161.10. 160 works as support, followed by 158.50. This is the dragon, the Gepi. Yeah. Okay. Is Korea talking nuclear again going to have any impact? I don't think so, because we've heard these comments from North Korea several times. Last comments over the weekend were that North Korea doesn't like the joint military drill by the United States and South Korea, and it has threatened to have the highest level of alert, of readiness, using their nuclear bombs. We've heard these threats in the past, given the past, and I'm also hopeful we won't have anything dangerous over there. I don't see it. I mean, in the past we did have, when things looked a bit more serious, when we had some bombs flying or things like that, we had Japanese yen strengthening on risk on safe haven flows, right? Even though Japan is a close neighbor of Korea, South Korea, and North Korea, and that's trouble also for them, right? So, but that's how risk aversion works. Okay, let's talk about events for today. We had German factory orders at 7 GMT. They came out a bit better than expected. Let's refresh the chart. This is the FX Street calendar on Forex Crunch. So we did have them fall 0.1, but it came out better than expected, minus 0.5. We have lots of fluctuations in this data series, so shouldn't take this too badly. Anyway, year over year, we expected 0. It came out 1.1. Also good news. More importantly, this morning, well, not too many figures. We have the Centix investor confidence at 9:30 GMT, 9:30 in London, 10:30 in Central Europe. Expected to rise from 6 to 8 points. Let's see if it'll have any impact. Usually it's sort of a second tier figure. Sorry. What I am looking at later today, well, on the back burner, still on the back burner, Eurogroup meeting. Okay, we have an unresolved situation in Greece. It's already 8 months, 9 months since the big crisis in the summer. Greece was forced to accepting a third bailout, which means more cuts. The economy is back to recession, unemployment is rising. There's a disagreement between the European Union and the IMF regarding a few things there. Let's see if they can iron things out or not. At the moment, the story remains on the back burner. More in European news here in Spain, and also the second attempt to vote on a government failed. If there's no government formed by the beginning of May, we'll have fresh elections here in the middle of June, June 26th, 3 days after the British referendum. So there's a lot of uncertainty still in Europe, but it doesn't take center stage. Central banks are far more important, and we have Mario Draghi coming later this week. What we do have as the main dish for today, we have speeches from 2 central bankers, 2 FOMC members. One of them is Lyle Brainard. She's a dove. She'll be speaking at 6 GMT. Let's see if she repeats her dovish stance about not raising rates, not seeing any kind of inflation, worries about the situation, and things like that. It's and later, at the same time, perhaps more important, a speech by Stanley Fischer, the vice chair number 2 at the Federal Reserve. He'll be speaking at the same time, and he's been sort of more to the center, even a bit hawkish. Let's see how he talks about the current situation, where we are, if I'm not mistaken, 9 days from the next Fed decision in March 16th. No change in rates is expected, so it'll be interesting to hear. Yeah, these speeches can be boring. No need to watch them live or to read the full text, of course, but yeah, these people talk a lot and they hardly make any policy changes, but it can certainly move markets. Let's see if they see the glass half full, the big rise in jobs, or the glass half empty. In any case, and also they see markets, of course. if they see an improvement, and this allows them to raise rates more easily or not. Anyway, currently, a rate hike is priced in only towards the end of the year, and also this is very much in doubt. Okay, yeah, they just muddy the market. Yeah. So that's what's going on. So these are for me the main events for today. It could have an impact on euro dollar because euro dollar is also awaiting the ECB decision. Yeah, euro dollar, okay, continues its move downwards, 109.50. This is a result of two things: the strengthening of the US dollar this morning, a recovery, and of course tensions towards the ECB. Okay, let's talk a bit about that. I see we have some time. Of course, your questions are more than welcome. The European Central Bank meets every 6 weeks. This time it's going to be a more important decision than in January because we have fresh forecasts and we have what we heard last time from the ECB, that they will reconsider monetary policy, the downside risks have materialized, and that they're ready to act. Since that meeting in January, indeed, inflation has deteriorated. It's not only falling oil prices, which cause headline inflation. It's actually back to deflation, a drop of 0.2 year-over-year in prices, but also core inflation is down from 1% to 0.7. That means there's still danger of deflation. The ECB in various occasions, especially Mario Draghi, the president, said that they're ready to act, that they never give up, do whatever it takes, and things like that. We also heard from Jens Weidmann, the head of the Bundesbank, that he also supports more action. Of course, he's usually hawk. He, in general, objects QE, but he showed his readiness to act. What we did have as an interesting development was on Friday, I think, or on Thursday. Sorry, let me get that. What we had is a leak from the ECB. I think it was Friday. A leak from the ECB that said that there's only consensus about cutting the interest rate. Okay, we have a negative deposit rate of minus 30 basis points, minus 0.30, that they're ready to cut it to minus 40. Okay, and that's the only consensus that there is on the Governing Council of the European Central Bank in Frankfurt. No agreement on more QE. No agreement on more quantitative easing and more bond buying. Currently, it's 60 billion a month. No agreement on other sort of non-conventional steps. Okay, so at this moment, so if we believe these leaks, these reports, it's going to be bad for. I mean, not good enough for markets. That means the euro is going to rise. Less money printed. Not a big cut in the deposit rate. Limited ability to act, it's bad news. I mean, good news for the euro. We did see the euro rise just a bit, and it was on Friday, just before the non-farm payrolls. Usually, currencies are stuck towards the NFP. They're sort of waiting. But you can look at it the way I presented it now. But let's take another look at this. What did we have in the last big meetings of the ECB? In December 2015, we had huge expectations. Draghi did deliver some news, a cut in the deposit rate from minus 20 to minus 30, an extension of QE from September 2016 to March 2017, and a pledge to reinvest proceeds. That means for every bond that matures, they'll buy another one, maintaining a high level of their balance sheet. But expectations for markets were so high that it wasn't enough. It was a huge short squeeze. Euro dollar went from the lows of 105.20 all the way to 109.80. Okay, they don't want to do this. What they would like to do is to have a repeat of January 2015, when they had these press reports, these leaks talking about limited action, only 50 billion euros per month bond buys, and eventually they delivered 60, and only 750 billion or so in total for the program, and eventually they exceeded 1 trillion. So they created low expectations and then over-delivered. Under-promised, over-delivered. It had a huge effect, a negative effect on the euro, very positive effect on stocks. They want to repeat that one, okay? So this might be part of the preparation. Yeah. I see questions here. When we read different statements, which places of them are more important? Because sometimes a statement will have 60 pages, but the real info is in 3 sentences. Well, usually you have journalists getting the information beforehand and sort of picking the headlines. And even if the journalists pick the wrong headlines, this is what moves markets, what appears on traders' desks on the Bloomberg terminal or Reuters one or whatever they use, and that's what has the impact. So if you follow the news on Forex Crunch, on FX Street, on other websites, you'll get the gist of it. 60 pages is certainly a waste of time to read. If you have statements from, let's see, the Fed statement, it's about 2 pages. I think that is worth reading. But yeah, 60 pages is certainly not worth reading, okay? If Draghi says that they will act in the next meeting, but they don't act now, Q is sure, but not now. Do you see the bullish? First of all, if they don't act now, it'll be hugely bullish for the euro. They're expected to do something. The minimum of the minimum is a small cut in the negative deposit rate of at least 10 basis points. I think that if Draghi does only that or doesn't do anything, it'll be a huge disappointment and the euro will shoot higher. Promises are not good enough. In January, they promised to act. Okay? The question is, how much will they act? If they cut the interest rate by 20 basis points, for example, from -30 to -50, that's significant. If they add to it an enlargement of QE from 60 billion to 70 billion or even to 80 billion, that's significant. If they do all of this together, that's significant. But if they do only a bit of that, it's not good enough, okay? I published on Forex Crunch preview by Goldman Sachs about this. We'll have more previews. I'll do my own one. We'll talk about it, of course, I believe every day this week because it's a really, really big event, okay? Yeah, let's have another question here about CAD yen. Let's take a look at the Canadian dollar against the Japanese yen. Also a reflection of risk on, risk off, right? Here we are on higher ground, higher oil prices, less demand for safe haven, risk appetite as aforementioned. We're seeing this cross stronger, okay? So perhaps we've bottomed out. We have a double bottom here at 79, okay? We've seen during February. Very strong resistance here at 87. Support a bit choppy, but still 83.50. Perhaps in the nearer term, we have support here at 84.30. And perhaps the wrong number of 86 works as resistance. I think we could see a few more days of rising oil prices, and this could support the Canadian dollar and weaken the yen. On the other hand, the Canadian dollar did make a huge move. If you look at dollar CAD, it's about 1,300 pips, so it's quite a lot. But oil prices are still looking positive. Production in the United States will not rise immediately. If oil prices continue remaining higher, perhaps in a month or so, production could rise once again, but not immediately, okay? Another request here for pound yen. Yeah, the famous dragon, 161.16. I think the trend is quite clear. We were 2,700 pips higher not that long ago. We are seeing quite a recovery. Is it a correction or is it or is it a change of course? I see it only as a correction, well, quite a big one. Of course, we fell to the lows of 154.66, and now we're about 600 pips higher, right? And anyway, the lines I see here are 160 as support, 158.50, 156.10, and 154.66. On the top side, 163.80 and 166. My bias is negative. Why? Because of the referendum talk. Everything could change in June after we're over this, but at the moment, I don't see the rise of the pound, not against the yen and not against the dollar or the euro, as justified. Economic data in the UK has turned sour. The chance of a Brexit is still here. The exit polls are very close. They show about 42 to 42 in chance in the voting tendencies, and with lots of people undecided. So this is the chart I'm looking at. I see this as a big correction from the downside. Of course, the pound against the dollar was in a much worse situation. So we're seeing it recover. The yen is looking for a new direction. So that's where we are at the moment. Okay. Any more questions? Let's talk about other events this week. We talked a lot about Draghi. I think it's the main event. Let's see if we're not missing any event, first of all, for today. So we talked about German factory orders, came out a bit better than expected. Nothing to be excited about, though. The speeches, well, I have the wrong hours here. Sorry for that. At 6 GMT, both are speaking. Fisher carries more weight. He's the vice chair. Consumer credit at 8 GMT, not that important. In Japan, we do have something interesting. We have the final GDP read and the current account. In Japan, revisions are quite common to GDP. So let's look at the data. Okay, we had it fall 0.4% in the initial read. Now we'll have the final read. I see we don't have any consensus, but any change, of course, will have an impact. If it's better, I mean, if it's a smaller contraction, it's good news. If it's worse, it's worse, of course. In annualized terms, it was a drop of, here we do have a consensus. We're expecting a downgrade from minus 0.4 to minus 1.4 to minus 1.5. All right. And yeah, and also a few other figures there from Japan. Worth mentioning, we'll talk about this tomorrow morning. In theory, there are bigger chances for a move from the Bank of Japan if we have a deeper contraction, but I don't see. Well, we have a meeting of the Bank of Japan on next weekend. At the moment, they're not expected to act. They want a weaker yen, but they seem a bit clueless. And the G20 also talked about not intervening too much, so I'm not sure it'll have such a big effect, but certainly worth noting. And this is already more important, at 2 GMT. Let's see if I'm not mistaken here with the hour. We have the release of China's, the time is correct, Chinese trade balance. Remember, the bottom line figure, the size of the surplus in this case, is not so important. What's important for China and for the whole world is the movements in exports and imports. Expectations, as you can see here, are quite depressing. We're expecting a drop of 12.5% in exports and a drop of 10% in imports. Remember, it's the month of February. We had the Chinese New Year celebration, so the data could be a bit skewed by that. But anyway, if we have deeper falls in imports and exports, it's bad news for the whole world. Perhaps we'll ruin this risk appetite mood. If we have smaller than expected falls in exports and imports in China, that's good news for the world, okay? And of course, the Australian dollar will be the first to react. Australian dollar is currently on high ground. I think the highest since the beginning of the year, no? Well, yeah, the highest in quite some time. So this is an important release for China and for Australia and for the rest of the world, with the Aussie currently trading the highest level since July, okay? Since the summer, not the summer in Australia, the summer here, okay? Euro pound, want to look at Euro pound? Let's look at Euro pound. We talked about this at the beginning. Let's take another look. This is the daily chart. We certainly came off the highs of 79.30. I still see 78.50 some kind of support. Further support 75.40. Resistance, yeah, 79.30 and 80. I think, well, this is a messy week for the euro. Everything depends on Draghi. The pound, regarding Draghi, I would focus more on euro dollar than on euro pound. And also for the pound, I think it'll be more interesting to look at pound yen again or pound dollar. But nice to short this, maybe you meant. Yeah, the argument for the downside on this pair would be that Draghi will kill the euro. There is a good chance that what they did on Friday is to lower expectations towards the meeting. And then on Thursday, Draghi will give us some very bearish news for the euro, and he'll shoot down euro dollar, shoot down euro pound. But there's also vulnerability in the British pound. So caution is warranted, as they say. Okay. If Draghi cuts the rates, will the S&P follow? The S&P is not likely to cut rates, not immediately. They could follow, yeah, everything is a possibility. I think they'll first try to intervene. They'll first see the reaction in currency markets, and if the franc is too strong against the euro, they'll first intervene a bit, and then maybe perhaps cut the negative rates even further. It depends on the depth of the cut of the what the ECB does. If the ECB cuts rates just 10 basis points and announces more QE, perhaps the S&P could intervene more and cut rates less. But if the focus is on cutting rates, there will be sort of race to the bottom on interest rates, and then we could see the S&P follow, also the central banks in Sweden and Denmark, which also have negative rates. Okay, hope this answers the questions. Let's look at more events this week before we get to the wrap-up. So today, as aforementioned, the NFP echoes. We talked about the mixed non-farm payrolls, the importance of wages. Tuesday, tomorrow, final GDP from Japan and Chinese trade balance. During the European and US sessions, we do have some events. We'll talk about them tomorrow, but they don't stand out like this one. On Wednesday, it's Commodity Currency Day. Rate decisions in both Canada and New Zealand. In Canada, both are not expected to change rates, but at least in New Zealand, they're expected to show some dovishness, show some concern perhaps about the exchange rate. And in Canada, well, the situation remains mixed, but at least oil prices are rising, and that's good news. Thursday, Chinese inflation figures, and of course the ECB rate decision we talked about a lot, which already has, of course, some impact. Markets are gearing up towards that. I'll have more previews, of course, on Forex Crunch. And on Friday, we have the jobs report in Canada and US consumer sentiment to set the final tone. Okay. Any more questions? Let's take another look at euro dollar. Yeah, continues this downfall. This is the daily chart. Not going anywhere fast in the past few weeks. We're around 400 pips down from the very top there at 113.75. Maybe this line should be fixed. Yeah, let's put a new support line here at 108.20. But stronger support is at 107.70 and 107.10. Remember the low of 2015 was 104.60 and the high was 117.12. Any hope on pound Aussie? Let's take a look at pound Aussie. 191. Quite a big fall over there. Despite the recovery of the British pound, we had a surge in the Australian dollar. Australian dollar advanced for very good reasons. Okay, so we peaked out here at 196. Okay, since then we've seen a downfall. 193 worked as some kind of resistance, and the low so far in this cycle 190.50. I still see 190 also as support because it's a round number. My tendency remains to the downside because of the deteriorating situation in the UK economy, worries about Brexit, and the strength of the Australian dollar backed by strong economy. Of course, if we have bad news from China this week, you could see a reversal, but in general, I think the trend is certainly justified, and we could have more falls to the downside. Yeah, that's the situation over there. Let's move to the wrap-up for today. This is the wrap-up for the live market open for Monday, March 7th. We have a fallout from the non-farm payrolls. Non-farm payrolls showed good job gains, good revisions, a steady unemployment rate with the rise in the participation rate, and even a drop in the real unemployment rate. But wages, which are becoming more and more important, they actually dropped month over month. Big disappointment over there. And they rose only 2.2 year over year. This led to a sell-off in the dollar, which is seeing some kind of correction today. It was good for stock markets on Friday. The risk appetite, risk on sentiment, because with stronger US economy but no inflation pressures, there's good reason for stocks to rise. So when we look at currencies, start with euro dollar, we've seen it rise above 110. It didn't make it to the next resistance line of 110.70, but here's the choppiness, and now we're falling back down. Worries about the ECB and some correction in the weakness of the dollar, some dollar strength. 109.60, well, not so strong a support. Further there, supported 109 and 108.20, resistance 110.70. Pound dollar also coming off the boil. Here it's more justified weakness in the UK. 141.25, 140.50, and 142.30 are levels to watch. Lots of talk about the Brexit, of course. Dollar yen very choppy within the 113 handle, flirting with 114 from time to time, supported 113.10. Okay, we have final GDP from Japan tonight. Let's see if it is different from the original read and if it moves the yen. Dollar CAD, Canadian dollar, enjoying much stronger oil prices. Also a big story over there. 133 is support, 133.70 resistance, 134.60 is further resistance. Aussie dollar now also a bit coming off, but showing a lot of strength. It had an excellent week. Last week found resistance at 74.40, further resistance 75, support 73.75. Okay, Chinese trade balance is the next big event for the Australian dollar. Kiwi remains strong, 67.64, crossed the 68 level. I still see 69, 67.90 resistance, followed by 69, further support 67, 40, 67, and of course the bottom of the previous range at 65.50. Okay. What else do we have on the? We talked about rising oil prices. The WTI crude oil is at the 36 level. This is around the highs of the year, seen very early in January. So the highest in 2 months. We have a fall in production in the United States. What the Saudis have hoped for is finally happening, and the fall in production. We have the Chinese National People's Congress, a 10-day event. They have the 5-year plans in the works. They set a lower bound of 6.5% to growth in the next 5 years. Of course, this is prone to changes, but anyway, this is these are the headlines coming out of Beijing. And fascinating political story in the United States with the primaries. Currently not affecting markets, but it could certainly have an impact. Primaries continue. The results on Saturday were less favorable for Donald Trump, a bit different than what we've seen beforehand. In the Democratic Party, it's business as usual. Clinton remains on the lead. We had a Democratic debate. We have more states voting tomorrow and more, well, it's an ongoing contest. So far, no effect on the markets, just a fascinating political story. Today, we have big events, as I see it, the speeches from members of the Fed, the FOMC. Brainard, she's a dove, she'll be speaking, but her words might be overshadowed by Stanley Fischer, which is number 2 at the Fed. It'll be interesting to see if both of them see the glass half empty or half full regarding more jobs but not enough pay. For example, worries about China vs domestic strength. We also have consumer credit at 8. Final GDP in Japan, also current account later, and the Chinese trade balance will probably set the tone for tomorrow morning's trade, because that's what European traders will wake up to. Anyway, currently the market mood is still positive. Some kind of a correction, some kind of risk off, but not huge at the moment, only slight correction. The ECB decision, well, as I speak, it's becoming more significant, with already a fall of over 50 pips in euro-dollar, but I'm reluctant to say that it's a big change, of course. Let's see how things develop. For the euro, it could be significant because the ECB decision is coming up, and the drug is expected to announce further measures. It's the big event of the week. We'll continue talking about it all week. Okay, so that's it for today. I wish everybody a safe and successful trading day. Thank you very much for coming, for the great questions, and I'll be here tomorrow. So until tomorrow, that's it. Bye-bye.